Let me ask, in this case, both of you, you heard, let me start with you, Mr. Suellentrop, you heard the previous panel in which we had representatives from the Federal Reserve, the Office of Comptroller Currency, and the FDIC. Did you hear anything there that you'd like to comment on? As at least it's been my experience in every conversation I've had with regulators at the table that you're seated at, they all indicate to me they make special consideration for community banks. They understand the challenges they face. They have task forces that have been created to make sure that community banks aren't over-regulated. There's the whole list of disclaimers about all the things we're doing to address the concerns that we're talking about, over-regulation of community banks. And yet it never seems to me in my conversations with my bankers that there's any consequence to that constant effort that is claimed by the regulators to avoid over-regulation. And I wondered if you heard anything from the witnesses today that did or didn't make sense to you.
No, I can't say that I did hear anything that I would change my perspective on how community banks are going to be regulated or examined going forward. I would say that there's a significant persuasive attitude that an examiner in the field would be the same as the examiner in Washington, that they're not interested in having a problem bank or failure on their watch. In other words, the comment was also made, we're going to err on the side of caution when we first part of our examination in 2010. And I don't think that's going to change. I think they have a significant interest in protecting their reputation, and one way to do that is to be aggressive and to be thorough in their examinations. We're not suggesting they should not be thorough. We just ask that they're equitable.
Senator Moran, I would just ask, and the word that comes to my mind is, and it's been used often, is the disconnect between Washington and the examiner in the field. Again, the examiner in the field has a difficult job, but yet they are out there, and generally speaking, there is no compromise, there is no discussion, there is no let's get this fixed now and we'll take care of this. The way it, and I'm ancient history now, the way it used to be in the examination field was a more cooperative basis in working together with the banker. Today's world, and I understand the world has changed. In the last 29 years that I've been CEO at Cattaraugus County Bank, every regulation that has landed on Wells Fargo or Bank of America has landed on my desk. There needs to be some type of tiered regulation. There needs to be a function where the examiners realize a difference between my risk profile and the way my business model and my relationship banking and the way that a $2 trillion bank does business. They don't have the flexibility to do that right now, so there is a real disconnect.
So the common conversation that we have that community banks, by regulators headquartered here in Washington, D.C., their leadership tells us that community banks are treated differently, but your statement, your sentence stands out to me about what happens to Wells Fargo. Every regulation that's been imposed upon them is imposed upon a community bank. Is that true?
That is true, and I look around and Wells Fargo, or whoever it may be, has X number of attorneys and X number of resources that they can allocate towards that new regulation. And again, over 30 years, they have built up and built up and built up. Every time I get that regulation, I look out my office and I'm looking at Sue or Mary or Bob and trying to figure out how are we going to do this. And in some cases, it doesn't relate to my market or my business model in a very rural part of New York State.
Any sense of the qualifications, the background and experience of the examiners that are in your banks today as compared to what they were in the past? Is there a change in the personnel that are examining your banks and their qualifications or characteristics? You mentioned kind of in a sense the good old days, but is there a change in who's in our banks today as far as ability?
My perspective would be, and these are extremely sharp, smart, intelligent young people in many cases. In many cases, I don't know the average age of the examiner today, but the old core, if you will, is gone, and the new youth is there. They're very smart. They're very intelligent. Do they have experience in banking? not specifically. Also, I do want to add, in today's world, when you have an EDP specialist, a compliance specialist, a BSA specialist, a CRA specialist, none of those examiners have a holistic approach to the bank as a whole. They are not in any way concerned about my capital, my 100-year-old history, even my CAMELS rating, or my profits. They're only concerned with their very narrow point of view of their expertise. So they're smart, they're intelligent, they're experts, but in my humble opinion, they need to broaden their holistic approach to the bank as a whole. We are not a risk to the FDIC fund, nor are we a risk to the economic system. So treat us in that way. Understand the role that we provide in the community. Because if they put us out of business when we're gone, and they'll be too late for my community.
Mr. Suellentrop, Kansas has lost 30 banks in the last 5 years, as I understand the numbers. One of my concerns is that community banking may become a thing of the past based upon increasing regulations and the cost associated with that. And by that I mean that community banks will need to have more branches, be acquired by a larger bank to spread those costs among more assets, more loans, more customers. Is there a consequence to the ability to keep community banking alive and well? Is there a consequence to this regulatory environment? And is there anything you see that's coming down the road? We still have the Consumer Protection Financial Bureau regulations to be put in place. Are there fears about what the next, my guess is you may tell me you may survive today, but are you worried about what's coming in the future and the uncertainty of that? How does it affect the operations of your bank?
Senator, I would say that there is a concern in terms of the number of community banks continuing to decline. Conversations with bankers through meetings and attended, I would say that the past year, 2 years, there's a significant concern that bankers who are likely to sell their bank and to probably merge with another institution, and one of the things I think that's holding them back is that their market for that is not good right now. But there are many bankers frustrated by the rules and regulations and examinations and looking to possibly get out of the banking business in the next several years. I don't see anything that immediate that's on the horizon that's going to change that. The Consumer Protection Bureau, as you suggested, has not yet begun to issue its regulations. That has certainly bankers concerned and a potential impact of additional regulatory burden. It's things that were discussed earlier, such as access to the secondary mortgage market, are very important to our bank and community banks, because that's one of our significant ways we can increase our business exposure to in our community.
Thank you, Mr. Chairman.
Thank you, Senator Moran. Senator Merkley.
Thank you, Mr. Chairman. And